Bear market squeeze or bull market rally? That's today on 3 Minutes on Markets and Money. So is this rally over the last couple of weeks a return of the bull market, or is it something else? Well, that's also the subject of today's article on the website at realinvestmentadvice.com. Bear squeeze or bull market rally, which is it? This is really what we're talking about. Now, just a couple of weeks ago, remember that Russia invades Ukraine, and we're talking about a day where the market opens down 3%, lots of panic in the market. By the afternoon, the market's up 3%. And again, this big reversal really kind of set the tone for the markets. Of course, sentiment was extremely negative. The world's coming to an end. We're having World War III, nuclear fallout, the whole 9 yards, and a lot of concern. Of course, investors making the decision to move out of equities, move into cash, short the markets, etc. Well, this got markets very offsides. Lots of negative sentiment, large short positions in markets, and portfolio managers really underweight equities in many, many cases. That tends to be a contrarian signal in general, because once you have everybody kind of on the one side of the boat being very negative, that means that any potential piece of good news that you're going to get is going to lead to a rally. And about this time, we started talking about this market basing along this bottom, saying, look, all we need is some good news, and we're going to get a fairly substantial rally out of that as we get repositioning. And starting last week, we started talking about the end of the quarter rebalancing, because now all these portfolio managers, etc., still off sides on their books. They're underweight bonds because bond prices have gone down as interest rates have gone up. So the weighting of their bonds is now lower than it should be. And on the equity side, they still haven't really repositioned a lot of their books back into, say, their 60-40 allocation. They don't have 60% stocks going into the end of the quarter reporting period. So they've got to add those stocks back in. We said that's going to help kind of lift this rally a bit more. That's exactly what's happened here. As we've been watching this rally in the markets, of course, on this quarter end rebalancing, we're now back up to some critical levels that suggest we might want to be a little bit more cautious. Now, yesterday we reduced some equity in our portfolio. We had bought some growth stocks here right around the bottoms. We simply reduced those weights back to their normal target weight yesterday, because all of these stocks are now getting back to very overbought conditions. We're very close to being 2 standard deviations above the 50-day moving average. We've cleared lots of major resistance here. This is good news, by the way. Markets above the 50 and the 200-day moving average. Good clearance above that now. That now gives the markets the ability to pull back to that support. If it holds, we're in a much better position moving into the month of April. But right now, markets are extremely overbought on multiple levels, suggesting that we need that type of pullback consolidation. Market set this morning to open up again as we kind of move into this very big resistance area right here along these previous tops. Also, where the top of the Bollinger Bands are as well. We've also completed a 61% retracement on a Fibonacci basis from this previous decline. So again, lots of reasons to suggest that we're closer to the end of this bull market rally than not, and that we could get some consolidation and pullback here over at least a week or so, maybe even starting next week after we get through this quarter end rebalancing. But pay attention to the risk in your portfolio. Don't be overly bearish right now because of all the headline risk out there. Markets are starting to improve on a technical basis, at least short term. Now, fundamentals remain weak, and there's certainly lots of headwinds as we move forward later into the year. But right now, be a little bit careful being too bearish, because the markets are working off of that bearish sentiment to actually frustrate investors to a large degree. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. Be back here tomorrow.